Hello everyone, welcome to the Option School. I hope you all are doing very great and the markets have been very fair and square to all of you. Today we bring you a video on the option chain and the focus of this discussion would be analyzing this option chain and using this data to analyze the derivatives and the movement of the market. Let's get started with the video. So the first question arises, if there is a metric, which is an option chain, we are talking about it, what is it basically? So in the very layman of terms, an option chain is basically a table which shows all the tradable call as well as put options which are available for a stock or for an index. Let me more clarify this. ऑप्शन चेन एक टेबल ऑफ फॉर्मेट का डेटा है जिसके अंदर वी गेट टू नो ऑल दी स्ट्राइक्स which are present in the market and then they can be traded. So the table also contains some more matrices such as strike price, which I have told you already, the open interest, the volume, implied volatility, last traded price, and there are more such data present on the option table. But for the intraday setups, as we are talking about that in this video, for intraday setups, the focus should be right away on the open interest part, the change in open interest part, and the volume part. As we go downline the line, in the video I will tell you about all these matrices on the real option chain. So here is the option chain which we all must have seen somewhere here or there. This is the option chain from the NSE's website. Here you can see in the middle there is strike prices. On the left side there are calls. On the right side there are puts. So this part which is in the dark color, this is the in the money part. Same goes for the put side. And the color where there is white, it is the out of the money part. Here you can see there are things like open interest, change in open interest, volume, as well as implied volatility. There are some more data which are listed like these. Now this option chain contains all the required data, but in the pictographic form. Do we have a better option chain? Let's get into the better option chain. So here I have presented you an option chain from the Nifty trader. Here you can see we also get to have a look at the Greeks. We can also add gamma and vega if we get into the settings. In this option chain, I am going to tell you what are all these data sets. So the first is open interest. So open interest is basically all the open contracts which are traded on that particular strike. इसका क्या मतलब है? सो एक स्ट्राइक प्राइस के ऊपर, एक पर्टिकुलर स्ट्राइक प्राइस के ऊपर कितने कॉन्ट्रैक्ट्स ओपन है, कितनी पोजीशन इन टर्म्स ऑफ कॉन्ट्रैक्ट ओपन है एक पर्टिकुलर स्ट्राइक प्राइस पे, ये हमें बताता है ओआई. उसका दूसरा पार्ट क्या है? चेंज इन ओआई. सो व्हाट इज चेंज इन ओआई? चेंज इन ओआई बेसिकली द एडिशन और द सब्ट्रैक्शन of the total contracts. So the change is OI, change in OI is the change from OI. So the change in OI tells us whether एक strike price में से subtraction हुआ है contracts का या फिर वहां पर addition हुआ है contracts का. What does the volume tell us? The volume basically translates into the number of shares. Just as we know, Nifty's one lot has 75 amount of share. So this can accordingly convert into the amount of shares present on that particular strike. This also tells us about the liquidity of that particular strike. The fourth part was the implied volatility. So implied volatility is there to tell us about the possible price movement of that particular strike price of that particular option on the upside or on the downside. So here I have mentioned, so open interest is the total outstanding contracts. The change in OI tells us the momentum of new contracts. If the change in OI is very fast or is larger in number, that tells us that the addition or the momentum of addition or subtraction in the other case is very, very high. The volume tells us about the activity and the liquidity in that very particular strike. And implied volatility, as we have already discussed, is the expected price movement in that particular strike. So we have talked about the matrices which one should track, and here I have presented you the four. The first one is open interest, change in open interest, volume and implied volatility. Now we all must know that in the very nascent stage it is said that wherever there is highest call OI, wherever there is most number of contracts on the call side for the market for that day, it acts as the resistance zone. And the same part on the put side, it acts as the support zone. So let's suppose if Nifty is at 25,000 and we have maximum call OI at 25,500 for that day, for that particular day, that would act as the resistance, and wherever there is the highest put OI, that would simply act as the support for that. Here I have shown you a weekly price chart, and for that particular week we have supposed that 25,500 has the maximum open interest on the call side, and similarly 24,500 has the maximum put OI that will act as a support. So you can clearly see from this very example, this candle has taken a rejection from the support. Here you can see this candle has taken the rejection from the resistance. This has again taken resistance, and the market has simply shown a very sideways movement and the market has gone down. So this is how market should, I am not saying will, should react or should work in the case of resistance and support when we see it with the OI. Now, how do we actually read this? How do we map the intraday shifts? So, wherever there is increase in the put OI, whenever the open interest is increasing on the put side and change in OI, change in open interest is faster in the put side, that simply means the support is strengthening. Same when it happens on the call side, that might mean that the resistance is now increasing. Whenever call OI is falling, you can see that the change in OI is becoming negative. That means people are exiting their particular position on the call side. That tells us that the resistance now might be weakening, and the shorts, because selling a call or a call sell is basically going bearish on the market. But if the call OI falls, if the people are exiting their contracts on the call side, that might mean that the market will now surpass this particular level and move on the upside. And on the put side, if there is a price movement on the downside and you see that people are exiting their positions on the put selling side, or in the other terms the change in OI is negative on the put side, that for that particular day, that might act as a very weak support and market might break down from that very particular strike. So here I've presented you a 5-minute candlestick chart, and here you can clearly see the markets went up and the maximum call OI was on 25,500. Markets went up, there was a consolidation on this part and it came down afterwards. Once it tested the resistance and then the market came down. Same on the put side of it, the market was there at the support, there was a hammer formation on the downside, there was a very there was addition of puts, there was put writing on this level, and the markets came up from that very particular strike. Now what are the confirmation tools one can use? So you cannot, or one must not rely just on the option chain or the OI data or the change in OI data. We also must have a basic knowledge of price action. It is not so that the candlestick patterns on the support or the resistance are showing us the trend continuation, but in the face of it, we take otherwise positions just by seeing the OI data. This should alone not be your trading strategy. For example, if there is a heavy put writing on particular strike and there is a very bullish candle made, or the market has hovered below this very particular strike, suppose this is the strike where we have maximum put OI, market is hovering here and there, but it is not going down, and you see a very bullish candle. Let's suppose Marubozu candle being made here. This might tell you that the market is making this very particular strike as a very good support. And on the same front, on the call side, if you see the market is hovering above or is taking good resistance here and then comes down, you may and you must then confirm that this acts as a very good resistance for the day. Now, what are the cautions for this data? One must not just follow this is one thing. Other thing is the data is made after the price has been done. So this might happen that you must see that this is the maximum call OI strike, this is maximum put OI. Market must go up from here, and you might think that market now has given a breakout, but market might hover here and give a false breakout. So the traps are common when it comes to this data. So one must confirm this with the price action and also has their eyes on the change in OI part. How much is the change in OI might tell you the perfect picture. So always confirm this with the intraday price action. And the last but not the very least, one must use the stop losses. If you use the stop losses, suppose you have taken a short position here and you have taken a well well risk to reward ratio of a stop loss, you might be able to play this whole trade for the benefit of your trade. So on the conclusion part of the video, I would like to tell you, and as we have already discussed, for intraday, one must focus on the open interest, and open interest should be seen in hand with the change in open interest, and the volume should be seen in terms of the liquidity. How much activity has been there on that very particular strike can tell you the greater picture. One must map the support and the resistance with option chain data, and intraday setups should be followed with these many matrices. And in the last, if you found this video helpful to you or you found something new about the option chain in this video, do share your feedback in the comments, give us a like and subscribe to the channel. And with this, I take a bow. Thank you.